I'm Joanna Simpson here at FundForum International in Copenhagen. Joining me now is Luke Bars. Thank you very much for joining me today.
Thank you for having me.
And just tell me, what's your view on the current state of the markets? Are you more bullish or bearish at the moment?
We're actually quite constructive at the moment, and it's obviously a backdrop where there are some existential risks and people are starting to get a little bit more concerned about where we are in the cycle. But our base case here is we're still quite a long way from that cycle ending. And part of that is just cycles don't end from old age. They need some catalyst to cause that to come to a correction. And so when we look at the fundamental picture across global macro space or across equity markets, actually it still seems reasonably healthy. Earnings growth, whilst maybe a little bit slower than it has been in previous years, is still fairly healthy. And we think valuations are still supportive for long-term investors in equity markets.
And how are you thinking about EM equities, given the rising tensions between the US and China? Do you see an opportunity there for investors?
We absolutely do. So if we think about our big picture outlook for capital markets coming into this year, we were overweight equities versus credit and overweight credit versus rates. And actually within that equity view, EM was the standout market where we were most optimistic. And so we obviously have to understand the dynamics between US and China and what that means for sentiment, both in terms of domestic growth sentiment, but also in terms of investor sentiment. But we don't see it changing the fundamental picture too severely. So just to put some context around that, if you think about the tariffs that the US has put into place on Chinese imports, that will have a net impact of around 40 or 50 basis points on Chinese GDP growth. So that means China, instead of growing maybe 6.5%, will grow something like 6 or 6.1%. That's not a hard landing, that's not a crisis. Of course, we have to recognize that growth might be a little bit slower and earnings might not pick up at the pace we'd like to see. But given where valuations adjusted to last year, actually EM seems to be a place where we're seeing a lot of interesting opportunities.
And how are millennials' tastes and habits impacting the prospects of the business that you're in?
That's a fantastic question. So we're obviously fundamental investors. So what we do is we invest in businesses, and what we have to really understand is what's driving the opportunity for those businesses and what's creating the risk of obsolescence, what's creating disruption for their business model. And one of the things we had seen over the last 5 years, really being at the coalface talking to companies, was millennials' demands, i.e. the types of products they want and how they want those products delivered to them, really starting to have quite a big bearing on their forward-looking strategy. So just to give you some context, there's 2.3 billion millennials in the world. Millennials are people born between 1980 and 2000. And that is the biggest demographic cohort today. Now, people will often look at millennials and say, okay, well, if we think of the negative connotations, they don't have the same employment opportunities, they don't necessarily have the same wealth as their previous generations, they like avocado on toast. Actually, there's a lot of different things that make it very exciting from an investment standpoint. One, first generation in history to be brought up in the digital age, so how they're consuming information, how they're consuming products, very much aligned to that digitalization. And then secondly, there's a much greater preference here for experiences as opposed to physical products. So if we think about demand for outbound tourism from somewhere like China, where there's 450 millennials, you've seen that grow exponentially in the last 10 years. 65% of the outbound tourism flow from China is millennials looking to try and find some experience different from their parents. So putting value on new experiences as opposed to simple staple products that we might have seen in previous generations.
And we're hearing a lot of talk here about ESG. So why do you think ESG matters, and what are the biggest challenges that you see for investors?
ESG has really become the in vogue topic, and we've heard a lot about it here at the FundForum in the last couple of days. To us as fundamental bottom-up investors, first and foremost, ESG investing is just good investing, right? And what I mean by that is if you're buying businesses for the long term, if you're buying businesses that can have a sustainable return profile, you have to understand what those companies are doing. You have to understand their ESG practices, because if what they're doing internally is unsustainable, at some point that becomes a financial issue. So it's not a moral or ethical consideration necessarily, it's also a financial consideration that you have to embed into your decision-making process. And so for us, there's always been an emphasis on this. We do have to take advantage of this confluence of data that is now available to us, but we shouldn't trust that implicitly. I think that's one of the biggest risks, is people trying to quantify ESG and say, I can now tell you what is a good company and what is a bad company. Because implicitly within that, there's a lot of data that doesn't actually have material impact on long-term returns. Right? Our colleagues in the GSAM, in our research division, came out with a comment not that long ago where they said 85% of all ESG data that's available is policy statements. In other words, what companies say they're going to do. Not necessarily what they are doing, not necessarily what they are committed to do and you can hold them to it on account over the next couple of decades, but just what they'd like to achieve over the longer term. So in that sense, we have to understand what is the material information that we can get as an investor, how can we utilize that in our fundamental process and apply judgment to it to lead to a better outcome? And I think most importantly for us as a fundamental investor, you can't just stop when you've made that decision. When you've decided to buy into a business, you still have a responsibility to make that business better. And it's not just the holistic desire to make things better globally, it's also saying, if I can improve what this business does, actually that's financially rewarding to me as a stakeholder and to all other stakeholders as well.
That's very interesting. Luke Bars, thank you very much for your time.
Thank you very much. Lovely to be here.